crude oil prices have been one of the biggest headlines we've seen take place over the last few months. Well, I have with me the man of the moment, if I can say so, Dev Sanyal. He's Executive Vice President and member of the Group Executive Board at BP. Dev, thank you very much for joining us here on CNBC TV 18.
Pleasure.
What do you make of where crude prices are right now?
Well, sometimes we look at market events from a microscope, but if you look at it from the perspective of a telescope, maybe the insights are different. 10 years ago at this point in time, crude prices were trading around $40. Today it's just shy of $50. A year ago, of course, it's trading at $100. So in some respects, what we've seen in the last 3 years of a stable $100 price regime is actually unusual. Where we are today is actually the norm, a point of volatility, which of course is what you'd expect in a commodity cycle.
So do you expect, and I'm not asking you for a forecast on prices, but since you have to assess these things in your regular course of business, is it realistic to expect prices to stay between $40 and $60 to $70 a barrel for at least the next 2 or 3 years?
Well, I think Paul Samuelson said, if you forecast often. But I think it's fair to say today the fundamentals are being reflected in the price set. The fundamentals are pointing to an excess of supply, and the fundamentals are pointing to weakening demand. And therefore, it's playing out in the market in the current way. Now, if something changes, in other words, there is some kind of disruption in supply, or indeed demand picks up, then we could see a change. But what that would be is hard to predict at this point in time. But I think the key message here is fundamentals are essentially being priced in to oil.
Okay, most assessments or estimates seem to indicate that demand is unlikely to pick up substantially in the next year or two. Incremental increases in demand could take place since the U.S. is the one big country with growth, and it seems to be on its way to becoming self-sufficient in energy, that there isn't going to be a big change in the demand situation. Would you agree with those assessments?
I think it's difficult to say, because I think what we are seeing even at the current point in time, with the rapid lowering of gasoline prices in America, where the flow-through is more transparent than many other parts of the world, you're seeing an uptick in demand. You're also seeing an uptick in demand in Europe as well. But I think fundamentally, supply has been, if you will, the factor that has been driving the market to a very significant extent because of this excess of non-OPEC supply coming into the market. OPEC has actually been relatively stable in terms of supply. It's a non-OPEC players led by the United States with this extraordinary revolution in shale that has actually caused some of the market dislocations in terms of the supply coming in into the value chain.
There's a degree of politics involved in this as well, in terms of not just fundamentals driving the price, but the decision by OPEC members to protect their market share seems to be one of the big reasons for why we're seeing oil where it is right now.
Well, clearly, I mean, OPEC has been telegraphing this for some time, and certainly in Vienna they telegraphed it. Indeed, yesterday at the forum, the Secretary General telegraphed the same message, which is market forces will essentially determine where prices lie. And clearly at this point in time, there has been no impact by OPEC in terms of some kind of cutback in terms of supply.
Okay, I want to come to the implications of what lower crude prices means for the world. For countries like India, it's a big boon. But what does it mean for investments in the energy space in the years to come? Would you at BP be reconsidering some of your investments given where crude oil prices are right now?
I mean, sort of put in perspective, a $60 drop in the price of oil, which is what it's been since summer of last year, essentially translates into a $1.6 trillion shift of rent from producers to consumers. Right. That's sort of roughly 2.5 to 3% of GDP. So there is quite a big shift taking place in terms of what is happening to consumers versus what's happening to producers. Because India is such a large importer, in fact India is the largest importer of oil and gas amongst the BRIC countries, clearly a lower price environment does benefit India. Sure. But in our business, Menaka, one has to look at it in a very long-term perspective. We look at sort of, multi-decade cycles. We don't look at it from a year-on-year. Obviously, you don't need to make sure that your financial framework works in the short term. But as we think about our investment horizons, they are very long-term horizons. So one of the challenges, I think, for the industry at this point in time is how do we ensure that we manage through the short-term dislocations while keeping a very clear line of sight to the long-term, which of course will require investment not only in terms of capital, but also in terms of capability. Right. Because when you look back, when I started in the industry 25 years ago, oil prices were sort of around $10. And at that point in time, investment stopped, and actually capability also got degraded. We need to make sure we've learned those lessons as we move forward. So I think there's a balance here that companies will have to achieve, reacting to the short term while keeping a very firm eye on the long-term fundamentals. Energy demand will grow as the world grows.
Fair enough. What would the short-term reaction include?
I think a number of different dimensions. I think efficiency and productivity is going to become very important for companies as they look at the OPEX. The supply chain is going to come under increasing scrutiny, as one would expect. Clearly, there will be some level of rephasing of capital investments. One has seen that amongst the independent sector. Total made an announcement yesterday. So I think the usual fundamentals will sort of come into play, which is how do you drive efficiency as you manage the cycle, and how do you ensure that your financial framework is robust by investing at a level that is appropriate for all the other requirements of your capital, one of which of course is distributions.
Okay, talk me through which areas of energy now look most promising, given where we are maybe in the short to medium term with crude, the exposure to shale in the US, geographically, what looks most exciting to you at this point in time?
Well, a lot looks exciting, but I think there's a fundamental trend that is very important, which is actually around the growth of gas. And that is actually very important for the world. I think it's actually very important for India as well, given India's extraordinary domestic resource base, which we are, of course, participating in partnership with Reliance. Gas is clearly looking into the next 20 years, going to grow by around 2%. And that's going to be very fundamental, because when you take a step back, in terms of the characteristics of gas, it is actually a cleaner form of energy. And the way one should think of it is a 1% increase in gas at the expense of coal has the same impact as an 11% growth in renewables. So there are real quick wins associated with the environment with gas. There are real opportunities, I think, in terms of actually creating a greater trajectory of growth in this part of the fossil chain. Now, oil will continue to grow at 0.8%, we believe, in the next 20 years. But it's a gas story that is a very interesting one because of the environmental ramifications in the short and actually long term. Okay,
fair enough. You mentioned India. I want to come to your business in India, which you do in partnership with Reliance, as you just mentioned, which Reliance is the owner of the channel that we're currently speaking on. That disclaimer having been made, are you disappointed with the gas pricing policy of the Indian government? And how does that influence your decision to participate maybe in the next round of exploration whenever it takes place?
I mean, Menaka, we've been in India for actually 100 years.
Yeah.
We have a very big company in India called Castrol, which provides lubricants to a fast-growing automotive sector and industrial sector in India. We also actually have a very important business in India in terms of manpower, in terms of technology, and in terms of back office operations. So the way I sort of describe it, we've got mines, we've got molecules, and we've got markets in India, the 3 M's. So we have a very diverse business in India. Now, in terms of our upstream business, again, what I said earlier is very important. We take a very long-term view. And when you take a long-term view of India, there is no doubt that the gas story is a very attractive one. India is energy hungry. India needs more gas. It needs more energy. And actually, India has got a very, very attractive resource base indigenously, which needs to be now exploited in a way that creates enduring benefits. The market fundamentals are very attractive. So we like the India story from its long-term perspective, and it makes perfect sense because of integration. The real opportunity here is how do we now create the right price signals so that the investments can flow. And that process is sort of, taking place. Some steps were made, as you know, last year, but there's more to be done. And I think, the government absolutely recognizes that, and there's a very constructive dialogue in that respect. But there is no doubt in my mind, the long-term fundamentals of India are extraordinarily attractive from our perspective.
I'm not doubting the long-term fundamentals of India. I think my question really is that when you decided to do business with Reliance, you knew that they were in the middle of a dispute with the government on gas pricing. They were promised something, it turned out to be something else. I'm just curious as to how you assess the risk of that pricing policy and how that influences your decision to continue to expand looking for more gas opportunities in India or energy opportunities in India. For instance, you're in arbitration right now with the government with regards to the pricing policy. How will that influence, the result of that influence your decision to add to your business in India?
Well, I mean, to put in perspective, in 2013, of BP's 9 major exploration discoveries, 2 are in India. So we are still sort of seeing, as I said, more resource base. I think, again, there is sort of a tide in these things in terms of the price signals, etc. That's being worked through. Long term, is that sort of going to be important in terms of creating the real growth story in investments in our sector? Absolutely. But these things, are not just sort of purely economics. They take sort of time to make sure there is the appropriate consensus. And, quite frankly, over time, one would expect that to happen because quite simply, the reality is India's importing today is energy, a lot of it. And the reality, of course, is that India has got this domestic resource base, which it can exploit for its prosperity. So I think these are matters that will take time. But is the sort of fundamental direction around creating new investment opportunities by creating a more open market? I think absolutely.
Okay, can I attempt to paraphrase that? Are you saying that if you don't get the desired price for gas that you want along with your partners, that would not influence future investments in India, that you would continue to invest at the pace previously determined?
No, I think it's fair to say that in our business, the price signals are important. Just take India aside for a minute.
Okay.
Even sort of when you look at it globally, when the price of oil has come down from $110 to $50, it would be, I think, extraordinary to say nothing changes. So when you look at it across the piece, when the price moves, our investment programs also move. Not in terms of our base capital expenditure or in terms of existing greenfields, but around the edges one can actually adapt. So similarly, I think in India, we will sort of look for the opportunity for the right price signals to bring the next level of investment. Okay. We believe that next level of investment, we already invested $8 billion, by the way, but the next billions of investments we believe can actually, even at these price conditions, create value. In other words, savings of India to the extent of around $50 to $60 billion.
Okay,
so these are big numbers.
Yeah, fair enough. I just have one final question to ask with regards to India specifically and the pricing issue, and that is to do with this big crash that we've seen in oil prices. Does that make your case weaker for higher oil prices with regards to your specific project in India? And when I say your case, I mean the combined case of you and your partner. Does it make it weaker because you now have to, sort of factor in the fact that energy prices across the world have come down considerably?
Well, I mean, of course, our business in India is primarily gas, not oil. But in terms of sort of the oil...
gas would be impacted by oil prices as well, right?
To an extent, but there is a different sort of mix in terms of gas versus oil because, of course, oil is a global commodity, gas is a fairly regional commodity still. Right. It's not a global market.
I understand that.
But again, when you sort of look at it, it goes back to what I said earlier. When the price shifts, you will see more competition amongst nation states for capital because of course people will be looking at their capital budgets very selectively in a way that $110 environment creates a ability to have more slack and I think that's sort of part and parcel of the commodity cycle. But that competition is going to be an interesting one because clearly a number of companies have actually announced some capital cuts. There will be sort of choices made to create the best possible options, not just for the short term but also for the long term. And so that focus on quality is going to be a very significant focus in every boardroom, I suspect, at this point in time.
Fair enough. But would it reduce or make your case weaker for a higher price of gas in India, given where oil prices are right now, and given that there would be a corresponding, not equal, but a corresponding impact on gas prices as well?
I think what we are making is a point around sort of market pricing. The prices are what they are. But it's sort of moving towards a market-based mechanism that creates true transparency. That's, I think, the key transition that needs to be made. And I think there has been sort of progress in that respect, but there's more work, as always, to be done.
Okay, I'll get off the uncomfortable topic of pricing, clearly, because you are in the middle of an arbitration with the government. I think this is an appropriate time for India to build a long-term energy security policy. It's something that we've been discussing in the country for a long time now. And your thoughts on what India could do? I know we've seen China buying up reserves over the last few months as prices have come down. We don't have any semblance of an energy security policy as yet in India. So I'm hoping the government's thinking about that, and your thoughts on that would be very, very interesting.
Well, Menaka, I think one looks at it in a more holistic way, in a more expansive way. There have been some extraordinary strides in India. When you sort of take a step back, in 1990, roughly, the UK and India had around 300 terawatt hours of electricity. Today, India consumes over 600. The UK is at around still 350 to 380. So a lot of strides have been made very quickly, and sometimes we sort of focus on the dark side, but there is a light side as well, and some extraordinary progress has been made. So one should not discount that. One should be reflective of that. But I think fundamentally, for India's energy security, I think a domestic economy, a domestic energy economy is going to be very critical, which is why I'm so excited by the gas story in India. Because fundamentally, India today is the largest importer of oil and gas amongst the BRIC countries, 70% compared to China, around 53%. And there is this resource base that's available in India. The question is, how do we create, as we said earlier, the right conditions, the right above-ground conditions, I call it, for that to be monetized quickly? I think that's going to be a very important factor, because when you take a step back, India's growth in the next, for energy, in the next 20 years is around 120%. Emissions will grow roughly at around that rate. So the question is, how do you create the change in the mix to create not just the economic prosperity, but also the right conditions in terms of the environment? And I think that's why it's an important story. By the way, we've not talked about renewables. Renewables is also an important part of the mix. But I think when one takes a step back, in the next 20 years, I think it's fair to say that conventional fossils will actually play a very important role. They will not grow as fast as renewables, but again, the base of renewables is relatively small. So I think solar, wind will continue to grow, hydro, from a very low base.
When crude's at $40 and $50, I mean, all of that becomes relatively more expensive from a capital investment point of view, right? So I'm not sure whether this is going to be the year of a big push in renewables.
No.
Though Mr. Modi's government has made it very clear that that is one of their medium and long-term strategies to expand the mix and include renewables in a higher proportion. Right?
And when one looks at sort of solar, for example, I mean, the efficiencies have been driven in solar manufacturing and solar production. I mean, it's been extraordinary. Huge strides in terms of the last decade. More to do. But one has to think about this in a very long-term perspective. And so for me, the key challenge for India is, how do we continue to grow the gas economy domestically? And actually, how do we continue to grow the renewable sector? Those are going to be two big growth avenues for the future.
Okay, just one final question. Forgive me, I don't follow regional gas prices as closely because in India we don't have market-based pricing. But how much have gas prices come down by, roughly, given the big crash we've seen in oil prices? Have we seen a big come down in at least in the Asian region?
Yeah, we've seen across the piece. I mean, the fundamentals are again ruling the market.
I get that,
So one has seen sort of, Henry Hub is now sort of trading at around $3.
Okay.
Asian LNG has come down, and NBP,
so
which is the market.
20 to 30% cut in gas prices.
Quite a big cut. Yeah.
Okay. Dev, we appreciate you finding the time to speak with us here today, and all the best for the year to come. It seems to be a challenging one for business. Thank you very much.
Thank you, Menaka.
Thank you.